Welcome back to Zaki Crypto Update. Today we're diving into a critical and potentially game-changing moment for XRP. As one of the most closely watched cryptocurrencies in the market, XRP has found itself under intense pressure, with its price recently breaking through the crucial $0.60 support level. This development has raised concerns among traders and investors alike, sparking discussions about whether XRP can defend its next key support at $0.50. And with rumors swirling about a possible CSE appeal in the ongoing Ripple case, the stakes have never been higher. So the big question is, can XRP hold the line, or are we looking at a deeper correction? Let's dig in and explore the complex factors at play. On Sunday, XRP experienced a noticeable decline, losing 2.62% of its value and closing at $0.56. While this might seem like just another day in the volatile world of crypto, it's actually part of a much larger trend that's been developing over the past few weeks. This recent drop is particularly significant because it marks a reversal within a long-term triangle pattern, a pattern that has been forming since September 2021. For those new to technical analysis, a triangle pattern is a chart pattern characterized by two converging trend lines, one representing resistance and the other support. As the price moves closer to the apex of this triangle, it typically signals that a breakout either up or down is imminent. Unfortunately for XRP holders, the recent price action suggests that the breakout could be downward, potentially signaling a major correction ahead. But why is this $0.60 level so important? In the world of trading, certain price levels are considered key support or resistance levels. These are prices where an asset has historically struggled to move above resistance or below support. When a support level is broken, it often signals a shift in market sentiment, indicating that the bear sellers have taken control. In XRP's case, the break below $0.60 is a strong indication that the market is leaning bearish, with traders bracing for further declines. Now, let's talk about the ongoing legal drama that's been hanging over XRP like a dark cloud, the battle between Ripple and the U.S. Securities and Exchange Commission (SEC). This case has been a focal point for the entire cryptocurrency community, not just because of its implications for XRP, but because it could set a precedent for how cryptocurrencies are regulated in the United States. Recently, Ripple scored a partial victory in this case, with Judge Torres imposing a $12.5 million penalty on Ripple. While this is a far cry from the SEC's original demand of $2 billion, the case is far from over. There are growing discussions within the XRP community and indeed the wider crypto world about the possibility of the SEC appealing certain aspects of the verdict, particularly those related to Ripple's on-demand liquidity ODL sales. So what does this mean for XRP? First, it's important to note that any appeal by the SEC could introduce a new wave of uncertainty into the market. Legal battles are notorious for dragging on, and the mere possibility of an appeal could weigh heavily on investor sentiment, leading to further price declines. However, it's also worth noting that not all appeals result in significant changes. In fact, according to attorney Jeremy Hogan, a well-known figure in the crypto legal space, the injunction on Ripple's ODL sales is unlikely to change the status quo significantly. Hogan points out that most XRP and ODL sales occur outside U.S. jurisdiction, meaning Ripple can continue its operations in other markets without significant interference. Moreover, Ripple's legal team has had ample time to adjust its practices to comply with the summary judgment ruling. This means that even if the SEC were to appeal, Ripple is in a strong position to defend its case. But let's be clear, while Hogan's insights are valuable, they don't eliminate the risk entirely. The mere possibility of an SEC appeal could still have a chilling effect on the market, leading to heightened volatility and potentially pushing XRP's price lower. And in the unpredictable world of crypto, even a small amount of uncertainty can have outsized effects on price movements. Let's take a closer look at the technical side of things. The daily XRP price chart tells a story of mounting pressure and potential for a major move. The recent price drop to $0.56 isn't just a random fluctuation, it's part of a larger bearish reversal within the multi-year triangle pattern we mentioned earlier. This pattern has been a key guide for traders, indicating that XRP has been trading within a narrowing range with lower highs and higher lows. The recent breakdown of the $0.60 support level has brought XRP closer to testing the next critical support at $0.55, which also coincides with the 200-day exponential moving average EMA. For those unfamiliar with EMAs, these are trend indicators that smooth out price data over a specified period. The 200-day EMA in particular is a long-term trend indicator that many traders watch closely. A break below this level could trigger a more significant sell-off, potentially driving the price down to the psychological support level of $0.40. So why is the $0.40 level so crucial? It's not just about psychology, although that plays a role too. The $0.40 level is backed by the lower trend line of the triangle pattern, which has historically acted as a strong support zone. This means that if XRP were to fall to this level, we could see a flurry of buying activity as dip buyers step in, hoping to catch the asset at a bargain before the next rally. However, it's essential to keep in mind that technical analysis, while useful, is not a crystal ball. The market can and often does move in unexpected ways, influenced by factors that no chart pattern can predict. That's why it's crucial to stay informed and keep an eye on the broader market context, including news, regulatory developments, and overall market sentiment. Speaking of market sentiment, let's talk about XRP's funding rates, which can give us valuable insights into how traders are positioning themselves. According to data from CoinLast, XRP's open interest OI-weighted funding rate is currently at minus 0.0085. For those not familiar with funding rates, this negative rate means that short sellers, those betting that the price will go down, are paying to maintain their positions. This negative funding rate is a clear indication that the market is leaning bearish on XRP. When funding rates are negative, it suggests that there's more demand for short positions than long ones, indicating that traders believe the price will drop further. This sentiment, combined with the potential for an SEC appeal, could create a perfect storm for XRP, pushing it toward that critical $0.40 support level. But it's not just about the numbers. The sentiment behind these numbers is crucial. In the world of trading, sentiment often drives short-term price movements. If the majority of traders believe that XRP's price will continue to fall, this belief can become a self-fulfilling prophecy, leading to further selling pressure and deeper price declines. So where does this leave us? Will XRP be able to defend the $0.50 support if the SEC decides to appeal? The answer isn't straightforward, and as we've discussed, it depends on a range of factors. On the technical side, XRP's recent price action suggests that the bears are currently in control, with the price breaking down from the $0.60 support and heading toward the $0.55-$0.40 range. On the regulatory side, the possibility of an SEC appeal could add further pressure, potentially intensifying the bearish sentiment. However, it's also important to remember that the crypto market is notoriously unpredictable. While the technical indicators and market sentiment suggest a bearish outlook, things could change quickly. For instance, if Ripple manages to fend off the SEC's appeal, or if there's positive news from the broader crypto market, such as a major adoption announcement or a favorable regulatory development, we could see a reversal in XRP's fortunes. And let's not forget about the potential for market manipulation or unexpected whale activity. Large holders or whales can move the market with a single trade, either by buying up large amounts of XRP to support the price, or by selling off large holdings to drive the price down. These factors are difficult to predict but can have a significant impact on price movements. As we wrap up today's analysis, it's clear that XRP is at a critical juncture. The recent breakdown of the $0.60 support level, combined with the potential for an SEC appeal, has created a challenging environment for the cryptocurrency. While there's a strong chance that XRP could test lower support levels, potentially even dropping to the $0.40 range, it's also possible that the market could surprise us with a sudden reversal. For all our viewers out there, it's important to approach these market conditions with caution. Remember, this video is for informational purposes only and should not be considered financial advice. Cryptocurrency markets are highly volatile and prices can change rapidly. Always do your own research and consider consulting with a financial advisor before making any investment decisions. As always, we'll keep you updated on the latest developments in the Ripple vs SE case and XRP's price movements. Make sure to smash that like button, hit subscribe, and ring the notification bell so you never miss an update. And let us know in the comments,